Hello, this video is for our private members group, and we will be covering our basic setup of how to trade based on how we're doing with the rules set out in the group, how we are positioning ourselves as not investment advisors or signal providers, and how this is a training program for you to become a better trader, both in the short term and the long term. So I have a list prepared today that we'll go through of all the things we want to accomplish in terms of how the group works. This is meant to be more of an introductory video. So this really covers a lot of things from your mindset right down to the indicators we use, what we do in the group and what we do not do in the group, which time frames we're going to be using, how to trade, and just the various, as I said, the indicators we're going to be using. So first and foremost here, let's begin with number one, which is your mindset. And just to kind of set out the overall feeling of the group here is that I don't want you to believe that you're going to have automatic success just by joining this group. But what I've learned after many years of doing this is that your mindset is actually just as important, if not more important, than the charts you're reading. And the book that I found the most helpful is not that old of a book, actually. It's called Mindset Secrets for Winning by Mark Minervini. And in case you're not familiar with this name, Mark Minervini is a very famous stock trader. He's one of the champions of the U.S. Stock Investing Championship, I believe it's called. It's I could be wrong about the name, but it's a sort of a tournament where a lot of professionals will kind of compete against each other. So in this book is sort of like, it'll sort of redefine the way you think as a trader, and I found it extremely helpful. So just want to get that out of the way right off the start here. Okay, so we as the admin of the group, what our job is to do is we're going to come in on a daily basis and put into the Telegram chat in real time which stocks we believe are sort of like a high quality tradable stock at the moment. And what we're doing here is like this type of trading is called trend following, which we're doing. Like there's many different types of trading. There's like contrarian, there's value investing. So what we're doing is called trend following. So everything that we're doing is going to be either in an uptrend and we're interested to buy it, or we're in a downtrend and we're interested in shorting it. And so what your job as the members is you're going to take this information and you're going to use our training that I'm going to provide in this video, and you're going to go out and execute the trades of the ones that I have put on the list as a high quality trending stock. Now, when you finally do start doing it, you're going to be wondering a lot of things about like what exactly you're doing, why, like what's like the analysis of you as a new member is not exactly that complex. It's actually very simple, and I've done that on purpose actually, because over time, my job is to get you as kind of as successful as possible in the shortest time possible. And it's not really possible to do that unless I kind of do a lot of the work for you, but you very importantly must do the final step of using the training and making the decision of actually buying or selling the stock. So our goal here is to make you, after you go through this process for a while, I can't really say if it's years or months, I don't know, but our goal is to make you 100% independent so that at some point you actually don't really need the group and the list and all sorts of that stuff. Like it's great if you do, but we like having the community. But that's one of the key differences of the group, is that we don't want you to be like kind of long-term dependent, and I think that's for the best. Okay, so number 3 is we're only trading on the 2-minute candle chart for US equities. So I got one example here. Is we'll go through this very shortly. This is Tesla from the previous trading day. Today is Sunday, July 12th, 2026, and this is from July 10th, which is the Friday, the last day of the previous week. So I'll go through very shortly some of these indicators to just give you a feeling of what's going on. Okay, so very important. In this group, our trading, the trades are not intended to be held all day. So as you can see from that Tesla that I just showed you, it's not exactly performing well the entire day. It's kind of only during the middle of the trading day it's doing well. The rest of it, it's very kind of confused a little bit and choppy. So when you make a trade, just remember, and I'm going to help you with the exit strategy as well, these trades are not to be held the entire trading day, or especially overnight. Okay, so next up is I myself, I prefer to not trade in the first 30 to 60 minutes of the trading day. And this is because the market is the most volatile at this time, and it happens on a consistent basis. It's very tempting to get involved in this time period because you're going to see some stocks which are just taking off very strongly to the upside, and you're going to want to be participating. And so at this point in your career, I would suggest you to resist that temptation. And our group here, like I generally won't be posting anything for you on the list in the first hour of trading. So this is kind of for your own good, to allow the trend of the market to settle in and make it easier for us to analyze it. Okay, so now we're going to get into actual indicators, and I'm going to explain each one to you. If possible, I would like you to add all of these into a new layout in your TradingView account. All of these indicators are public except for the last one, which if you don't have access to it already, then just let me know and I'll get you set up with that. Our first indicator is the 200 SMA, which means the SMA means simple moving average, and 200 means the number of candles used in the calculation to plot the line. So here in our chart here is this green line. If you can see my cursor here, this green line kind of rising steadily throughout the trading day on Friday. This is our 200 period moving average. And the reason we're using this is because this is sort of to give you a, sort of keep you in your comfort zone, if you will. The slope of this line is extremely important for the price of the stock itself. As you can see, the line is rising, and there are some decent chances to buy this stock a few times in the day. If I zoom out a lot, if you keep a look at the green line, just generally speaking, really as a rule, is the slope of this green line is going to kind of determine the overall trend of what exactly the stock is up to. By the way, this the gold area you see here, like the dark gold, this is the pre-market session, and the purple would be after hours. So this darkest area here, this sort of gray, this is the regular trading session, and that's the part of the trading day which we are participating in. So we're not doing the other after-hour sessions. We're only doing the regular session. Okay, so that's my first indicator I'd like you to add is SMA, and then set this into 200. If you want to make colors on your own, you can feel free to do that. You can adjust the thickness if you like. The way to find this is you go to this little indicator here, which has some bars. If you hover over it, it says indicators, metrics, and strategies. If you click on that, then just type in, let's try SMA. Yeah, so here we are, simple moving average. That's the one you're looking for. This one is made by TradingView itself. It's not made by a third party. Okay, so that's the first one. Next up, we're going to do is the MACD. Okay, so the MACD, this is a very popular indicator, very old one as well. It means moving average, convergence, divergence. And you don't really need to know much about what's going on behind the scenes of the MACD, like how the calculation is made. Just in a nutshell, the way it works is that it just takes two lines, like much like our green one we have here. It just takes two of them of different lengths, and then just sort of measures, like, are they kind of going together or are they coming apart, sort of thing. So, like, don't really worry too much about that. The important thing is we need to analyze formations of this indicator, because this, I would say, probably is the most important indicator we have in the group as far as making decisions are made. So I have my MACD is on the lower level of the chart here, and we're just using the default settings. If you go to inputs here, you should see 12, 26, and 9. These are called the default settings. And another very important one I'm just going to highlight here, it's called the zero line. So let's just make this a bit more visible, just for the sake of the video. Okay, so now we have in yellow here, bright yellow, running across here is, this is called the zero line. What is the zero line? So when the MACD, and I mean the red line and the light blue line, when these lines are above the yellow, above the zero line, then our stock is considered to be in an uptrend. So as you can see, this time in Tesla that we're using as an example is we have a nice period of time here, kind of midday, right around the lunch hour in the trading session. We have our MACD is above zero, indicating that the price is kind of steadily rising nicely there. And so this is sort of like the key point of the MACD. So on the flip side is if you have price action moving down, then you're likely going to have the MACD is under the zero line, which is where we have here is the day kind of started off, and then here's where we have our first hour where we're a bit confused and we're not trading. And then we have some downward trend coming in, and this is where the price is falling. Now you might notice that our previous point we made about our green 200 SMA, our 200 SMA is actually rising. But here we have our MACD is under the zero line, meaning that the stock is actually in a downtrend at that point. So what I'm trying to say here is that we want to get situations where the green 200 SMA and the MACD are agreeing with each other, meaning that it is like either both are in an uptrend or both are in a downtrend. So back in our midday example here is we have the 200 is rising, the slope is rising, and also the MACD is above the zero line. So this is what we want. If we don't have these conditions, then we don't really want to be trading. You can see later on in the day the 200 is still rising. It's kind of a bit slower of a rise. But our MACD is under the zero line now, so this means they're not in agreement anymore. And sure enough, the price action is not strong at all. It's very hesitant at this point in the day. So take note of this, is that you want to have the 200, a rising 200 matching with a MACD above the zero line. Okay, so next up about the MACD is formations. Now, what is a MACD formation? A MACD formation is simply a pattern which we consider as sort of leading into an opportunity to buy or sell a stock. The first one we have here is called a higher low below the zero line. And so what exactly is that? So I'll just stick with this same chart, and I'll just try to find wherever I can an opportunity to explain this. Let's go back to our Tesla example. So the higher low is when we have a very low reading in the MACD, for example right here, and then we have another low come afterwards, which is higher than the previous one, but they're below the zero line. And that's simply what it is. So when the MACD is sort of like when you have a very low reading in the MACD, this indicates the stock is oversold. And now oversold does not necessarily mean that you want to be buying it at that point in time, because the MACD will often put in some kind of hesitation, meaning like the price is not going to rise immediately in most cases. So that's why we're interested in knowing the higher low. Let's see if I could find another one here for you. Here's one here as well. We start off the trading day right off the start. There is a low. And then about an hour later, there is another low, which is higher than the previous one, and both are below the zero line. And so this is sort of setting the foundation for a change in trend from downward to upward. And that's why we're interested in this formation. So we'll cover soon how to actually execute here, but for now I just want to walk you through all the formations that we're interested in. The next one is called a pinch at the zero line. So the pinch at the zero line, this one is also indicating sort of a change of trend as well. That's kind of our main purpose of using the MACD. Let's just try to come up with an example from our Tesla chart here. So what is a pinch? Well, a pinch is literally when the two lines of the MACD are pinching together. And here's one right here. Down in the bottom here, it's right near the zero line. So when we have our red line is rising and the blue line is rising as well, but the price kind of hesitates a little bit because the light blue line is much more sensitive to movement than the red line is. So because these candles are dropping here for a few minutes, this allows the light blue line to sort of fall a little bit, but it's still above the red line. And so these come together a bit, and that's what we call it, a pinch. So this particular example, there's a couple reasons why we would not really be buying it, although the stock does actually do quite well after this. First of all, this is in the first hour of trading, as we said earlier. Secondly, look at the green 200 SMA. It's very, very flat. I don't think I would really be too excited about this pinch. But as you can see later on in the day, like the stock's doing very well. But maybe one of our other rules will help us maybe catch this move. We'll see. And so anyway, that's the pinch. Next up is the zero line retracement. This one, I really like this one. So what is a zero line retracement? A zero line retracement is, let's find a good one here. All right, here's one here, back to our Friday midday example. We had the MACD down below the zero line. It came up through, and then the MACD kind of fell back down but remained above the zero line and actually kind of even touched it a little bit. And that's exactly what a zero line retracement is when you have the MACD will be rising like this and then falls back to the zero line before it resumes higher. And for downtrends and short selling, you would have to just do the exact opposite. Maybe we'll cover that a bit later. But here we do have our rising 200 SMA, and then we have our zero line retracement, and this could have turned into a very nice trade. Okay, let's keep moving here. I think we're on to maybe the last one. And there is something in common with all of these, which I'm going to cover very shortly. The last one is the double bottom. So I think this one doesn't need too much explaining. It's just very similar to the higher low we covered earlier, except it's a double bottom, which means they're equal. And so we have one sitting right in front of us here, which is two fairly equal bottoms, and then we have the stock taking off from there. So what do all these have in common? If we go back to our list here, is that we have a higher low, pinch at the zero line retracement, and the double bottom. What they all have in common here is that they begin under the zero line. And that's really our key thing of this particular strategy with the group is you want to be looking for a stock which is ideally uptrending in our green 200 SMA like we have here in Tesla. And then we have a MACD which has fallen under the zero line. So it's sort of like what they say about, like, they call it buy the dip, they call it. That's more or less exactly what we're doing here, except like if you go in like social media, for example, buy the dip is sort of a term used for investors who are not actually analyzing the market. They just see whenever there's a dip, they just buy it. This is much different though, because we have our own criteria, which is much more strict than that. We only buy dips which are in uptrends, and the uptrends need to trigger into a continuation of uptrend before we buy it. So once again, the reason I'm showing you all the MACD formations is just because we're getting to know what are the possible scenarios that the MACD will move from under the zero line into above the zero line. Because as I said earlier, when we're under the zero line, that indicates a downtrend, and then when we're above, that indicates an uptrend. So we're interested as traders in uptrending stocks which have MACDs below the zero line, and then have one of our formations which trigger into continuing the uptrend. Okay, so we might cover a bit more of this. Maybe I can come up with a few more examples here in the video. But let's move on anyway. We have two more indicators to cover here. The next one is called the periodic volume profile tool. All right, so what exactly is the volume profile, the PVP? Well, the PVP is these, as you can see, the difference here in the chart is now I've just added these kind of white lines. And there's also a red line. They're all horizontal lines. And I'm not going to get too much into the actual reasons why those lines are there and at those particular price levels. But we're just interested in it, like what are we doing as traders with these lines? And I think as you get more experience, you'll probably start to understand these a bit better, but I'm just trying to give you the most introductory lesson of how to use it on the most basic level. So as you can see on the right side of our screen here is we have lines which are being drawn in the current trading day. Like I know today's Sunday, but let's just say today's still Friday. With the volume profile is we're actually interested in when the trading day is running during the day is we are paying attention only to the previous trading day's volume profile lines. So for Tesla, that would be over here. And so we have 397.30 and 407.89. So just to make this a bit more easy to look at, I'm going to draw a line at this level, and then I'm going to hide the rest of the PVP. So once again, it's the previous trading day's candles and the data which determines the level of this line, and then we are going to use it in the following trading day. So the lines are generated from Thursday's data, and then we use the line on Friday. And so yes, that means on Monday, that means we're going to have another line which uses Friday's data for Monday's trading session. And that line for Monday will be 410.73. But for now, we're pretending as if we're in Friday's trading day. Okay, so what can we do with this line? This line is, as I said, not as important as the MACD or the 200 SMA, but this line is just here to give us some extra confidence of where the price is headed in a stock. So we've already determined we're in an uptrend, and when you have one of these lines from the volume profile is that this line kind of determines sort of like where's the line in the sand, if you will, like the border line of does the stock have a chance to kind of break out into a strong uptrend. And so this line is used as like a support level and or a resistance level if it's below it. So I'm not going to go too much more into this right now, but I still want you to add this to your chart. And I want you to make sure you go to inputs and it's set to 1 day. And the volume is the total volume. The value area volume is going to be set to 68. Row layout is set to number of rows, and row size is 85. Okay, so remove that and we'll continue on here. Okay, so our final one is our risk management tools, risk management levels. And this one is actually our only private indicator, which I kind of made this one together with some help, but this one is a private indicator. So this one you cannot just go back to your list here of indicators, and you cannot just type it in and get it. You have to have me send you a link. So if you don't have the indicator yet, just let me know and I'll send it to you. Okay, so what is our risk management levels? I've already added it here. I'm just going to make it visible. So the risk management levels tool it's a tool to tell you a couple of things, very important things. It'll first tell you how many shares should you buy, based on how many dollars of risk do you want to take in the trade. Secondly is it'll tell you where is your stop level where you would be closing the trade for a loss. because we all are going to be having this in this business. It happens to everybody on a regular basis, regardless of your experience level. So this is to help us manage and keep our losing trades small and to keep our winning trades large. So because today's Sunday, I can't really give you a real example because this is what the tool looks like here. You can see there's three horizontal lines, one white one and one red one. So if you look very closely, the red one says -1R. The white one says E, meaning your entry level. That means where you bought the stock. And then we have 1R, 2R, and 3R. And so these are levels. The R means risk. So it's like we're risking 1 unit. We're having 1 unit of risk, and we're looking for making profits of at least 1 or more units of risk. So it's like sort of this way is like if you have a losing trade, you've lost 1R. But hopefully if you have a winning trade, you're going to be making at least 2R. So this way is we want you to have you as a profitable trader, even if your win rate is less than 50%. And this tool will help you to achieve that. So I guess right now what we could do is let's turn to the crypto market, which is still open right now. And this will at least give me a chance to show you how the tool works in real time. Okay, so as you can see, as the live price, we're in Bitcoin here right now, and as the live price is moving around, so is the entire risk management levels indicator. It's following price, and the white line of our indicator is it's showing us where is the current price, and then this is sort of like once we make our buy decision, then we need to set our levels and we need to set our risk amount. So how do we do that? Okay, so Bitcoin happens to be rising in an uptrend, and so let's just say we're thinking Bitcoin's going to rise. Like if we look down on the bottom here, looks like the MACD has a higher low put in, and it's kind of starting to push through the 0 line. This might be a good sign that that Bitcoin is actually rising in an uptrend. It seems like all of our checklist is showing that anyway. So if we click on our settings for the risk management levels, we get this. Now, okay, what do we fill in? This is where a lot of this is up to you as a trader and your account size. So the first field here we have is our desired risk per trade. If we want to have that set to 50, you can have it set to $10 if you like. And what this does is it'll automatically take this number, and then it'll calculate the volatility of the stock and a few other variables, and it'll tell you how many shares you should be buying. And where is it going to say that? Well, it's going to say that right under here where it says 0. Why does it say 0? Well, because Bitcoin is a $64,000 product. If we switch to a cheaper token, let's go to maybe lighter token, what this one's called. It says here we should buy 465, I guess in this case it would be tokens of lighter. And why does it say that? Because we've set our desired risk per trade to $10. Like, look, if I trade this to $50, all of a sudden my position size jumped. It says I should buy 2,266. So that's the purpose of this, because you want to know what is your possible loss in the trade. So if it's $10, where is the price of the stock going to be if you've lost $10? Well, that's the purpose of the red line. And so our red line is we need to kind of think about where do we want to position our red line, because this is how we determine our whole strategy around risk management is kind of revolving around where is this red line placed. How do we move the red line? Well, we change this one here in the bottom here called the ATR multiplier. I've got it set to 2.5 right now. Let's say we put it to 4. Now we're going to see the red line jump. There, so now the red line is much further down than it was before. So what does that mean? Well, that means that our position size will be adjusted accordingly to manage this. And so now you got to ask yourself the question is, like how far away from the current price should you be putting this line? And I think this is going to come with some experience, I suppose. Like I would say where it is right now, like is pretty good for me anyway, because like let's say we're going to buy this now. Like look at this token has the green line is rising now. We have now a zero line retracement going back to touch the zero line. So this thing also looks pretty good. So if I were to put this trade on, I would probably have, I don't really want to put crypto in the same category as stocks because like crypto is much more crazy, but you got to think about what would happen to the MACD if this trade failed. So the answer is that the MACD would definitely go below the zero line. So I would position this line probably a little bit further down, but just start by getting a feel for it, and once you kind of get a few trades under your belt, you'll kind of get a feel for exactly where to put this. Okay, let's talk about the other lines, which are our profit lines. So the process here I follow is, let's say I take the trade at this exact moment. What I'm going to do is I'm going to set alerts on TradingView. I'm going to put one alert at the red line, and I'm going to put one alert at the first green line. And if you want to, you can even put it to another one. Because once the price starts moving, then the indicator is going to kind of go with it. If you want to have it stuck at one level, like let's say 265.88, we can go back to our settings here. We can actually go in here, entry price, we can put 2.6588. There, so that will actually freeze the lines at that level, even if the price moves away from it. So this is kind of makes it easier for us to sort of manage it if it's on the move. Like I tend to not do this. I tend to just put the alerts and that's it. Yeah, give it a try anyway and see how you like it. So what we're going to do here is we have to make a decision. This is also something you're going to gain with experience, is should you sell everything for a profit when you hit your first green line? If you look very closely, not sure how well you can see it, but the first green line actually says there 50%. The second one says 30%, the third one says 20%. What does that mean? These are just suggestions for how much of your position you could sell at each level. So you could sell half of it at 1R, another 30% at 2R, and then another 20% at 3R, and then leave the remainder of the trade on as we call this a runner. A runner is just one that has no no limit to how high it can go, because we don't know how well the stock is going to do in a day. So yeah, again, this is only a suggested strategy, but the whole point is that we're making a system which is making more money on the winning trades compared to the amount of money lost on a losing trade. Because once we get down to this red 1R here, negative 1R, the entire position gets closed. So keep that in mind, this is our strategy for making our winning trades larger in profit than the losses of our losing trades. Okay, so I think that that covers a lot of it, I think. Yeah, this is an intro video. What I'm going to do is I will give you some more, like maybe even some of my trades I can share, like after they're closed, that is, because I'm actually not permitted to give you live trades, so I can only kind of analyze past trades, but I don't mind doing that for the sake of helping you to get more familiar with everything. Anyway, so let's just go back to our Tesla here, and or maybe let's see if we can find some better other examples here I mentioned earlier. Like Tesla, we've looked at that a lot. Let's look at NVIDIA here. Okay, so here's one where this was on Friday as well. NVIDIA had a beautiful day, up more than 4%. However, I can't really see here any opportunity where we would buy it under our system. And not only that, it also takes off like crazy in the first hour of trading quite strongly. And as mentioned earlier, this is just something we have to accept as traders, as that there's a lot of stocks in the market, and not all of them are going to cooperate with exactly what we're trying to do. But as long as the market conditions are there, we could go through this list and surely find another one that we could trade. So just keep that in mind, because like we do have a zero line retracement here, but there is no, remember what I told you is that it all starts off with having the MACD under the zero line. That's our sort of starting condition that we must have, and it was just not here. So yeah, sure, it was under here during, like, at the end of the day here, but I also don't really like the final hour of the trading day either. So I would be hands off of this one, unfortunately, although it is a nice looking stock chart. Let's try to find another buy opportunity here we can use as an example. Here's a good one. Still with NVIDIA. This one is from Wednesday of the same week. So you're probably wondering, after all of these things that I've showed you, is what exactly is your exact moment that you want to be buying the stock? So I think this is actually a perfect example right in front of us here. Is this is kind of the whole training, like this is a very good example of it here, is that so let's just go through our list here. We have our 200 SMA, the green one, is rising. That's good. Let's check our volume profile level. So remember, if we're in Wednesday here, we have to look at the line from the previous day, which is Tuesday. And so that happens to be at 198.35. Okay, so let's just take this away to make it a bit easier to see. Okay, so our volume profile line is right there. Let's look at our MACD. So much like we had the MACD from Friday, NVIDIA was not under the zero line. And it came and did a zero line retracement without being under the zero line, which is not really my favorite thing to trade. I actually would avoid it, I think. What I will not avoid, though, is I'm definitely going to take this trade. Is you might notice this from our list is the higher low. And then, as you can see, as we have, after the higher low is put in, we cross the zero line, we make a strong push to the top of our volume profile line, and then after that, the stock has a strong move higher for most of the rest of this trading day. When would you exactly buy this stock? What we're looking for is we want to try to buy it right in here somewhere once we can at least confirm that the higher low is there. Because remember, one thing very important about the MACD is we call it a lagging indicator. And what lagging means is that the price of the stock is going to be moving kind of like the MACD is following behind it a little bit, kind of seems almost too slowly sometimes, but where I would buy it is definitely in somewhere in these green candles, because now we're at the point where we can see that we are actually for real crossing the zero line. And so we're trying to sort of estimate what formation do we have and what's the stock going to do as it crosses the zero line, and then we buy it at that point. So I really can't come up with a better example than this. Like, this is a great one. So the answer to your question is, as the MACD is passing through the zero line, we want to be buying the stock. Okay, so I think that's it for this video. If you have any questions, you can reach out to me, not through the Telegram, because Telegram is for admin only. So you'll have to reach out to me directly if you have access to reach me directly. If you don't, the other way of reaching me directly is through the X platform. So one of those two would be fine. Send me a DM through there, and we will be setting up some sort of group discussions, hopefully on a weekly basis. Okay, that's it.